So dear students, this is the last video of this series. In the previous videos, we discussed the important questions from block number 1, 2 and 4. In this video, we are going to discuss the important PYQs from block number 3. Okay, so those who didn't visit, please go through the channel, and if you like the content, please like, share and subscribe the channel. Okay, without further ado, let's get started. So next question is, what's the difference between banking and non-banking financial intermediaries, and what do you mean by non-banking financial intermediaries? Okay, so the term non-banking financial institution, it refers to the companies that are offering the financial services but do not hold banking license, okay, and cannot accept deposits. So they are known as non-banking financial institution, or NBFC. So insurance companies, brokerage firms, companies offering micro loan, all are examples of NBFCs. Okay, so now we are going to discuss the difference between these two, NBFCs and bank. So on the basis of meaning, NBFC is a company that provides banking service to the people without holding bank license, and bank is a government authorized financial intermediary, and that aims at providing banking service to the general public. So incorporated under Companies Act of 1956, that is NBFC, Banking Regulation Act 1949, that is bank, and demand deposit is not acceptable in the case of NBFC but acceptable in the case of bank, and foreign investment allowed up to 100% in case of NBFC, but it is 74% for the private sector banks. And payment and settlement system is not a part of system of NBFC but integral part of banking system. And maintenance of reserve ratio is needed for the bank but not required for NBFC. Deposit insurance facility available for banking services but not for NBFCs. NBFCs do not create credit but banks create credit. We discussed about credit creation and how the banks are working and how the banks provide help to the customers. All these things we discussed. And then transaction services that are not provided by NBFC but it's provided by the bank. So these are the basic difference between NBFCs and the bank. Now the types of NBFCs in India. So the main types of NBFCs in India are investment trust, development banks and other institutions. So investment trust, that it means they mobilize the savings of scattered masses and channelize them for productive uses. So they invest these excess money in various securities in addition to the provision of long-term loan. So the institutions that are coming under investment trust in India, LIC, that is Life Insurance Corporation, General Insurance Corporation and Unit Trust of India, UTI. Okay, now the development banks, they are also another NBFCs. Development banks, they are otherwise known as special financial institution, and that provide promotional functions, and they also provide financial assistance to the industries. And these institutions include IFCI, that is Industrial Finance Corporation of India, ICICI, that is Industrial Credit and Investment Corporation of India, IDBI, Industrial Development Bank of India at national level, and SFCs, that is State Financial Corporations, and State Industrial Development Corporation, that is SIDCs, that are present at the state level. Okay, so they are the development banks. Okay, next, other institutions that are coming under NBFCs in India, they are not providing financial assistance. They mainly undertake promotional activities and provide various services to the entrepreneurs. And these institutions include National Small Industries Development Corporation, that is NSIC, and State Small Industries Development Corporation, that is SSIDC, and Technical Consultancy Organization, TCOs. They are providing technical assistance to the entrepreneurs. Okay, so these are the different types of NBFCs, that is non-banking financial corporations, that are prevailing in India. Okay, next important question is, what do you mean by LIC, or write a short note on LIC. So LIC is Life Insurance Corporation. It is one of the prominent NBFCs prevailing in India, and currently the first IPO of LIC is happening. And LIC is one of the financial institution that is established in India after independence. The full form is Life Insurance Corporation, and it was established in 1956. The main aim behind this establishment was to spread the message of life insurance in the country. When it acts as a saving institution, that is LIC mobilizes as well as promotes the saving in the country. And then institution for term financing. So another function of LIC can be, it can provide last term financing institution, and Next is it's an investment institution. So as a large part of the investment by LIC is in government securities only, and it is stated in the law that it has to invest at least 50% of its in the government security, and then it stabilizes the share market. LIC plays a pivotal role in the act as a downward stabilizer for the share market, and this is because the inflow of the new funds, and this new funds helped LIC buy shares from the weak, and particularly when the market is weak. So these are the some of the functions or the roles played by LIC in Indian economy. Now next is development banks. So that is also an NBFCs. So development banks, they are the special financial institution that are established for the supply of three basic ingredients of development. So first is capital provision, knowledge, and entrepreneurship to the industry. So development bank is that financial agency that is providing medium and long term assistance to the industrial undertaking in the form of loans. So they provide loans to the industrial undertakings, and particularly in more medium and long term basis, right? So what are the functions? First is to promote and develop small scale industries, development of housing sector, then development of large scale industries, agricultural and rural development, enhancing foreign trade of India, to review or cure sick industrial units. So sick industrial units are those industrial units that are on the verge of insolvency or verge of termination, right? And to encourage development of Indian entrepreneurs. Now this startups and all now, so they are getting help from these development banks to promote economic activities in backward region, to assist in the growth of capital market. So these are some of the functions of development bank. So these all are coming under NBFC, that is non-banking financial company. Now explain the role of Industrial Development Bank of India. So its function is, it's an apex institution that is in the sphere of development banking, and it performs financing, coordination, and promotional functions. It renders assistance to small, medium, and large scale industries, both in public, private, as well as in the joint and corporate sectors. And what is the role of IDBI? IDBI acts as a financier, so it provides direct and indirect assistance to all type of industrial concerns. Then it acts as a coordinator. It coordinates the activities and operations of other term lending institutions that are engaged in financing, promoting, or developing industries. Then it acts as a promoter, and it includes planning, promoting, and developing industries to fill the gap in the industrial structure of the country. And it acts as a promoter particularly for the development of backward areas, promoting the institutions for small scale industries. Then establishment of technical consultancy organization, that is TCOs. So IDBI has set up a network of TCOs in collaboration with the state level financial and development institution, that is and commercial banks, so can provide inexpensive consultancy services to small and new entrepreneur countries. So TCO's main role is to provide technical advices to budding entrepreneurs, and who with in an inexpensive manner, right? So these are the important roles of IDBI in the Indian economy. And next is, what do you mean by SFCs or State Financial Corporation? They are the medium industries of the state, and it ensures balanced regional development, higher investment, more employment generation, and broad ownership of various industries. At present in India, there are 18 state financial corporation, and out of these 18, 17 SFCs are under the SFC Act of 1951. And Tamil Nadu Industrial Investment Corporation Limited, which was established under the Company Act of 1940, Company Act 1956, is working as a state finance corporation, right? Then organization and management, and SFC's organization and management, it includes a board of 10 directors, and they manage the state financial corporation, and the state government appoints the managing director, generally in consultation with the RBI, and all insurance companies, scheduled bank, investment trust, cooperative banks, and other financial institutions elect other 3 directors. And thus the state government and quasi-government institution nominate the majority of the directors of SFCs. What are the functions of SFCs? They provide loans mainly for the acquisition of fixed asset like land, building, plant, and it helps financial assistance to the industrial unit whose paid up capital and resource do not exceed 3 crore Okay, up to 3 crore they will provide assistance. And SFCs underwrite no stocks, shares, debentures, etc. of the industrial unit. So these are some of the functions of SFCs, right? So the next question is, what's the role of National Bank for Agriculture and Rural Development, that is NABARD, in providing agricultural finance in India? So NABARD is a development bank. It focused mainly on the rural sector of the country. It's an in fact India's apex development bank. So it basically performs three kind of role. First is credit function, development function, and supervisory function. Okay, so that's a role. So it frames the policy for rural credit in the country for all financing institution. National Bank for Agriculture and Rural Development NABARD will itself provide finance and refinancing facilities to banks and regional rural bank. It's apex bank. Okay, so identification of credit potential and preparation of the credit plan for all the district. Then it also helps all the regional banks and institutes under its governance with the preparation of their own credit policies, plans, and it helps regional rural bank establish an agreement with the state government and other cooperative banks and institutions. So it also monitor the implementation of such plans and track their progress too. Then it helps banks to improve their management information system, modernize their technology, and develop human resource, etc. So as per the Banking Regulation Act of 1949, NABARD has to conduct the inspection of the regional rural bank and other cooperative banks. It communicates and consults the RBI in matters regarding the license for new banks, opening of branches of rural bank, etc. And from time to time it also inspects the investment portfolios of regional rural bank and other cooperative, state cooperative banks. Okay. So the next question is, discuss the main source of agriculture credit in India. Source of the agriculture credit in India can be broadly classified into two sources, that is institutional and non-institutional. Non-institutional sources includes money lenders, traders, commission agents, relatives, landlords, etc. But the institutional sources vary from cooperatives, commercial bank, that can include all the commercial bank, private and public sector, RBI and NABARD, right? Then explain the salient features of regional rural bank. So regional rural bank are also the scheduled commercial banks in India, conducting banking activities for the rural regions at the state level. They were established with an objective for providing easily accessible banking and credit service to the rural population and mobilizing the financial resources from urban areas to the rural districts of our country. So RRBs, that is regional rural banks, plays a pivotal role in the financial sector, so finance service sector of India, particularly of rural India, right? Then it functions, it has a primary function and secondary function. Primary function include accept deposit, providing loans, and waste disbursement, particularly in the case of MGRNA, that is the Mahatma Gandhi rural employment scheme, right? So similar to the commercial banks, it has secondary function, that like they are providing agency services and general utility service to their customers. Agency services include foreign exchange, bill payment, etc. Utility services include ATM, UPI issuance of debit cards, locker facilities, etc. So these are some of the secondary functions that are provided by the RRBs in India, that is regional rural bank. Okay. Now the last question, that is balance of payment. Balance of payment or BOP is a statement or record of all monetary and economic transactions that are made by a country with the rest of the world within a definite period of time, particularly every quarter or a year. So that is balance of payment. So it records include transaction made by the individual, companies and the government. So the transaction between one country with the other nations, okay, with the world. So that is known as balance of payment. So the record of all the transaction that is happening between one country with the other countries across the world, that is known as balance of payment. A country's balance of payment will correctly indicate, a balance of payment statement will correctly indicate whether the country has a surplus or a deficit of funds. So surplus indicate that country's export is higher than the import. Deficit implies that import is greater than the export. Okay, so both scenarios, that is either a deficit or surplus, have short term and long term effects on the economy, right? So BOP has three components: current account, capital account and financial account. So the current account monitors the flow of fund from goods and services trade between countries, right? Capital account monitors the flow of international capital transactions, so that transaction include purchase or disposal of non-financial assets, example land, then non-produced assets. Okay, then financial account, it monitors the flow of funds pertaining to investment in business, real estate and stock, and it includes government owned assets such as gold, SDR, that are held with the International Monetary Fund. So these all are coming under balance of payment, right? So dear students, we covered almost all the important PYQs and topics from Eco 9, Money Banking and Financial Institution, and I hope these videos as well as the PDF will be helpful for you for getting a better score. And so there is no shortcut for success. Work hard, perseverance, victory will be yours only. So all the very best for all my students for your examination. And since you all are third years, you are going to a new horizon, and wish you all the best luck and all the very best wishes for your future endeavors. And so stay safe, stay healthy. God bless you. Thank you.